Good morning, guys. I just wanted to do a quick video on the breakers. Since some guys were asking me, if I can explain it in a video. So we have two types of breakers and two types of mitigation blocks. But for you guys, I'm just gonna give you the type 1 breaker. Okay, the first type. The other stuff is for the mentorship guys. I don't want to get into trouble with them. And I'm giving you stuff for free, which they paid for. Anyway. Right, so our breaker is like this, right? This is the breaker. It's usually here. So this is the order block that was used. So what a breaker is an order block. It's like a manipulation order block, right? So what happens is, before I come back here, when price was moving higher, right, making higher highs, higher lows, right? And then there was a high here, and a low here. There were some sellers who sold here. Those ones who don't even know structure, they're just selling and they see a high. Right? They sold here, right? And if they sold, now most of their stop losses, they are all here. All the stop losses, they're all here. It means the retail traders, even some guys who trade the breakouts, some prop firms, most of them, even the big guys who have money, some of them, they would sell here and put their stop losses here, right? Then price comes down. Now, when price is here, the institutions, or they call them the market makers, the bankers, or whatever they call them, right? When they see that there's a lot of money here, a lot of money, right? What they will do now is they're going to do a short-term buy, okay, to manipulate the market. So they're going to use the order block here, okay, the order block here to buy. But this buy is to buy and take out all these stop losses here. Okay, that's number one. Number two, they want the guys who are buying here from the old trend, they want them to continue buying, right? Continue buying, even buy the breakout here. The guys who do breakout, they buy here. Now, once that is done, what the market is going to do now, the big guys, then they're going to break structure, right? So now two things happened. Number one, they took out all these stop losses here. Okay, all this, the liquidity here. Number two, they induced buyers to buy. And now when they came down here, these guys are all trapped. Especially if these are the guys who don't have stop losses. They're all trapped in losses. Okay, it's now a loss. So when price comes down here, also for the banks, this is also a loss for them. Well, because remember, they bought here. This order block was used to buy. So now they are also in loss. So they also need to mitigate their loss. So what happens, the price is going to come back here for them to mitigate the loss. That's why sometimes if you look at the breakers, when price comes here, if you look at the breaker and the reaction, those are wicks. It's very quick. They just come back and drop. Why? Because they want to mitigate their losses. But they are not going to go back up here. Why? Because they want to trap all these buyers here. These guys, they want to trap them so that they will continue to be in a larger loss. That's why they'll not go up here. And that's what you call a breaker. Okay, that's what you call a breaker. So if I go back here, that's why price came back here. That's why price would come back to the breaker here. And most of the time with the breakers, okay, I cannot share all the information, but with the breakers, what you want to see, a high odd breaker, okay, the one that will work more is the one where this break of structure here, it should be a high volatility, like a big momentum candle, either one or two big candles here. Why? When you see them breaking this low here, this breaker, this order block, okay, with a high momentum candle, it means they are trapping all these buyers. They are moving so fast that they will trap all these buyers. So these buyers will not have a chance to get out. Whereas if they were moving very slow here, for example, if they were doing this very, very slow, right? Let's say this even take 5 or 6 hours. All the buyers here who are buying here, they're going to get out. All the buyers who are buying, they're going to get out on time. Okay, they will break out, they'll even close their losses, their trades at break even. Okay, but when you see them with a big momentum, it means that they are trapping those guys. And that's why price will come back to the break and then drop. Okay, but I know, so like I said, it also depends on context. Okay, like I was saying, like the picture that I sent, some of the breakers worked, some didn't work. Okay, there should be context behind the breaker. Don't just pick any breaker and say, okay, it's a breaker. Peter said it's a breaker, so let me just buy and sell. No. There should be context behind it, and that's what I usually teach in the mentorship. The foundation, I give you the foundation before we even get here. So because once you know the foundation, it will be easy for you to pick the breakers that will work and the ones that will not work. And you will be able also to know that, okay, for here, price is going to go past, to go up here, or maybe to take out liquidity again. Okay, you know when you have context. Let me show you a few examples on NASDAQ. Right, so we have this example here. You see, this is the order block. And then when price broke structure here, this is now what? The breaker block. So like I said, anyone who was buying here, buy, even the breakout traders, now they are trapped. They are trapped here. Because what you see, these two momentum candles, they came down, and now anyone who's buying here is trapped. And what did the price do? Price came back right here. Price came right to the break and then dropped very fast. Now, this is also, I think I'll just shade here. Doesn't matter, it's okay. You see this is what you call engineered liquidity. Okay, so whenever you see, I think here I'll just use the example in breakers. Whenever you see something like this is your breaker block, right? And then you see price do this, comes back up, but doesn't go to the breaker, or sometimes they even come back twice. Whenever you see this is what you call engineered liquidity. What they're going to do, what they want to do is they want people to sell here. And if you see this candle here, I know, okay, for us, we don't really trade the what do they call them? Those candlestick patterns, right? So sometimes I don't know what this is called though, or engulfing or something, yeah. So when people see this, they'll start to sell here. They say, okay, our price is heavily bearish. Let's sell, right? Let's put our stop losses here. Look what happened. They took them out and then they dropped. So when you see this engineering liquidity here, what you need to do is you need to put a limit order. Put a limit order right here. Only in this context, because what price will do is they're going to spike up quick and then drop. Just like what they did here. Okay, but you guys are going to do your own homework. Do your own homework. I won't spoon feed you with everything. Right, so this was the breaker. Right here, the breaker failed. This one failed here. Okay, this is the breaker. This was the BM, the break structure, but then price came down, way down here. So even if you bought here, this would have been a loss. But like I said, you need to know context. I cannot share the secrets right now because I'll get into trouble. Okay, or you can do your own analysis and do your own back testing to find out why. But here I'm just explaining the breakers. Okay, another one here, right? The breaker, anyone who bought here was taken out. Right, and then price broke structure, and then here the next day return to breaker. This is the breaker block here. Let me show you a few examples. Another one here. Right. So the guys who sold in Asia, okay, these Asian highs who sold in Asia, right? They were taken out here by this momentum candle. Number two, some traders, they were buying, buy. Then what did price do? Price came down, broke structure, huge momentum candle. Like I explained, whenever you see this, it means they're trapping all these guys. Once this broke structure and they came back to the breaker block, you would have sold here on the breaker block. Okay, they will not go up here. They won't go up here. Why? Because of what? This trapped traders here. They're all trapped. And also they didn't even close this fair value gap. And you'll be wondering why, because of those trapped traders. Another example. This is another example. Okay, so you see the price took out this low and also these lows here. Okay, so all the guys who were buying here, the ones who were buying from yesterday, they were taken out. Okay, and then like I said, number two, all the guys who were those traders who don't like really know market structure very well, like in depth, they would have been selling here. Okay, they would have been selling, and then what did price do? Price broke structure. Okay, so now these guys are all trapped. And then the next day they came back and then they were gone. They are very fast. Look at how they react. It's quick, in and out, and they go. They won't give these guys a chance to get out. Again, this one is a breaker block. But what happened? So you see the ones I marked in blue are the ones that worked. The ones that I marked in, what color is this? Pink or whatever. They failed. Okay, like I said, you need to know context. Why would this one fail? Why wouldn't I sell here? It's context. Context. You learn that in the mentorship. Again here, you see, these lows were taken, price broke structure, return to breaker block. In and out. Even if you're scalping here, this is actually this is the exact breaker block. Look at the reaction right here, in and out. And I think the last example is, okay, another one here. This is also the breaker block. Took out these highs, broke structure, return to breaker, drop. Okay, even if you're scalping, this would have been about 158 pips. And another example here. Okay, so sometimes you can see that this candle here went past the breaker block, but it closed above. Okay, it's still valid. This is still a valid breaker block. Why? Because price closed above. And here, this is a breaker. This is a clear breaker. These highs were taken out. Even these old highs from yesterday were taken out, broke structure. But why? Price did not react on the breaker. Price went up here. Why? Like I said, context. Need to know the context. Why some will work, some will don't, some don't. And we'll teach you, I'll teach you that in mentorship. Also, this one worked. Okay, this is a breaker block here, return to breaker here, in and out. You would have bought here. And I think those are the only examples. Oh, there's this one here, yeah, from last week. Okay, another, you see, well, like I said, a huge momentum. Okay, why would they drop so fast? Because they're trapping all the guys who are buying here. They're trapping them. They will not even have a chance to get out. Okay, and then the price will return to the breaker. Now we have this breaker here. This one. It's actually a 4-hour breaker. Right here. Like last week, price broke structure. This is now the new breaker. Price is right here. This is where they are. This is where they are. But anyway, for me, I don't trade Nasdaq. Yeah, this is where they are right now. Currently, they're here. Now, the guys in mentorship, they will know whether to buy or sell here because I taught them why, the context of whether to buy or sell here, what they need to see for this breaker to work or not. All right, I think that's all for the breakers. I hope this will help you guys. Take care and God bless you.